Well, President Donald Trump's tariff threats are back and markets are feeling it again as they did in April.
That's right, Diksha, and the bullish vibe of recent months are off, and traders are now in low-key panicking mode, and markets are giving recession energy as well. And that is what we have in our latest report. We spill the tea on how trade could surprise financial markets again.
As we stumble into yet another week filled with expectations of more volatility, the straws in the wind are blowing ominously. U.S. regional bank nerves are back. Funding markets are strained. The notorious opaque private credit markets are giving investors sleepless nights. Stocks are oscillating between gains and losses. Oil prices are falling. Gold still looks unstoppable despite coming off all-time highs, and markets have begun dabbling with bigger Fed rate cut bets. The real question is, will President Trump follow through on his threat to impose additional 100% tariffs on China ahead of his one-to-one with Chinese President Xi Jinping at the end of this month? Investors say no. Certainly, if he did, it would take the U.S. average tariff rate up to above 30%. If the maths is right, then that would surpass the level seen around Liberation Day in April. Back then, it was quickly evident that those high levels of tariffs were unsustainable. Still, the market reaction to his threat on October 10th was interesting, given that many of Trump's recent tariff threats have fallen on deaf ears. It hints that some are watching the tail risk of miscalculation in U.S.-China tensions. On the other hand, China has proven incredibly resilient to U.S. tariffs. Beijing has offset U.S. demand from elsewhere in the world. China has been backed by its higher value export industries, which are less dependent on American demand. Whatever the reasoning, stocks, cryptos, bonds, and currencies have fluctuated violently over the last 2 weeks. It's also telling the investors think further tariffs would require more Fed easing, not less, 6 months on from Liberation Day. The evidence so far shows the jobs market creaking and inflation remarkably benign. That thinking will be tested on Friday as Washington brings the shutdown data drought to a close. A U.S. consumer inflation data is scheduled for release on Friday, with investors glued in for any clues to the Fed's rate cut expectations next week. Whatever happens between now and the end of the next week, tariffs have re-entered the chat, and they're giving main character energy. Business Bureau Report, WION World.